All right, we're back with you to take a look at our ag commodity trade. I'm Marlon Bowling with you, and on the corn market, we have definitely had some firmness creeping into this market here today in follow-through buying from the rally that we saw in the grains yesterday. Here's an example. Take a look at December. We're trading 3 3/4 higher at 356 1/4 right now. You know what? That's only 2 ticks from our high of the day. We have the March contract 3 3/4 higher at 368 1/2. Also, just 2 ticks from our high of the day. On the soybean trade, though, we could not follow suit, at least on the early going. We have the November soybeans trading a nickel lower at 845 1/4 in January, down 4 3/4 at 859 1/4. And moving on to the wheat. Now, on the wheat trade, we have the Chicago on December trading 6 lower now at 518 per bushel. And what about Kansas City wheat? Well, here we have the December contract 5 1/4 lower at 521 3/4. And on the Minneapolis spring wheat trade, we have the December contract 5 1/4 lower there at 583 1/4. On the cotton, it had a small gain in the beginning. Today, we are firming up a little more. We have the December contract now 22 points higher, now 24 points higher at 78.71 cents per pound. Scott Gecas joins us from the trading floor in Chicago. He is with Longleaf Trading, and a little firmness in the corn market. We had overnight sales of corn and soy meal. Why did only the corn respond to the upside today?
Yeah, well, it's a weird dynamic. I mean, this is one of those weird, this only happens about 4 times a year. So it's triple witching. That's when all the options expire, all the futures expire. So you're going to see a lot of rebalancing. You're going to see a lot of volatility today. That's definitely confirmed. We definitely look at the open interest in the options. That's going to give you a good indicator where the futures are going to close usually. So we're just watching the markets back and forth. On days like today, all the fundamental news are just completely thrown out of the water. It's all technically based. So you're going to see big swings up and down all over the place. The biggest thing I've seen in today is that big move in gold. It was been up for a few days, and then we slammed it down and traded all the way down to 1192. So that just confirms just with triple witching going back and forth. As far as the commodities go, the big spike in all the grains yesterday was due to a lot of inflation concerns. So that was a catalyst for that buying. We're seeing a little bit of a pullback today. That is expected after those big moves.
All right, on the dollar, we noticed that the dollar has firmed up today. Let's take a look at what the December futures are trading at, and they are now at 93.830. That would be up 340 points on the day at this time. We did have a lot of weakness in that dollar earlier this week, so it is coming back some. Crude oil trade, we can take a peek at that as well. We have the November futures on the West Texas Intermediate crude now trading 76 cents higher at 71.08 per barrel. We'll come back in just a moment, Scott, and we'll talk about our livestock trade in preparation for the USDA reports coming out this afternoon. We'll visit about that when we come back. Let's take a look at that cotton market and get you updated there, as we had a firmer tone develop in the cotton earlier today, and it kind of came off of that a little bit. Last trade 78.79 and now 78.83, so now we are 36 points higher on the day as it inches upward toward its high of the day at 79.22. On the live cattle trade, we wanted to get you updated here, then take a look at some pre-report estimates too for the report this afternoon. October live cattle in advance of the report are trading 40 higher at 112.85, in December up 15 at 118.05. On the feeder cattle, we have the October contract over there now trading 64 higher at 157.92, and November firming up to go 60 higher at 157.75. And on the lean hog trade, it had been going the other direction early this morning. It still is to some extent. We have October down 33 at 60.92, and December lean hogs 40 lower at 57.88. The analyst estimates for the cattle on feed report that will be coming out in a little over 2 hours from right now had the on-feed number pegged at 105.3% of a year ago, placements at 104%, or a 4% increase, and the marketings at 100.1%. And so basically the same as what we had a year ago. So tell us about this here, Scott Gecas. Your thoughts on this cattle on feed report when it comes out. Do you think any bearishness is already built in here when you talk about the cattle side of the complex? It's had kind of a tough go here for a couple of days now.
Right, and you're still running into the short-term supply concerns. We're going to see how that really plays out in this cattle on feed report. The one thing that really sparks my interest at what I've been reading as far as the cattle goes is the weights are higher. So with the weights being higher when they're usually supposed to be coming down, I mean, that does give us a little bit of a bearish tone. So with that already in place, I mean, that's already known. If the cattle on feed report has any bearish tone in it, I expect a big spike lower with increased volatility.
Okay, now when you look at the recovery efforts on the hog industry following Hurricane Florence, it's going to take a while. You know, a lot of folks admit the farms are going to take a while before they can really get back into full swing and full operation out there. That puts a lot of demand on the western half of the pork belt, if you will, out in the western corn belt to really fill the need for the supply right now. Are they going to be able to do that moving forward?
I think that everything is going to run into not enough supply and more increased demand, just worldwide. So you have the problem in South Carolina with the plants not coming up to speed as quick as they expected. That hurricane wiped out about 5,500 hogs. That's about double of the last hurricane that had any type of impact on that. So that's definitely concerning. Plus, you know, overseas in China, you have the African swine flu that continues to spread. I mean, it's very evident that they can't control it. They're just trying to get ahead of it a little bit, but reporting case after case. I mean, they're seeing reports in China that are 1,100 miles difference with the farms. So it's very evident that it's spreading and they can't control it. Now it's already spreading over to Europe. So with 2019, we expect that Canada is going to be a major importer of U.S. pork. They're not going to have a choice but to have those imports regardless of these tariffs or not.
All righty, very interesting times that we are observing right now. And Scott, thanks for the analysis. Appreciate it. Scott Gecas of Longleaf Trading in Chicago.